corporates as well to talk about. Sorry. So the first up, it's Praj Industries. They've reported a mixed set of Q1 numbers. The order inflow has slowed down for the fourth consecutive quarter, but margins are at a multi-quarter high despite the dip in revenue. Shishir Joshipura, MD and CEO of the company, is now with us to take a few questions. Thank you very much for joining in. The revenue in FY24 degrew by 2%. In Q1 too, we've seen a drop in your revenues. What's the outlook for FY25? And are you on track for your 2030 target?
Yes, we have seen some moderation of our revenue in the recent quarters, but we are very, very confident that our target, that guidance we gave for 3x in 2030 stays. In fact, what's happening is that our business is transiting in terms of its over-dependence on one particular segment to multiple segments across, and that is what is now reflective. So that transition is taking a little bit of a time out of sync, if I can use that word. Overall, we believe that we are very much on the track to achieve the guideline that we gave.
Okay, sir, what's driving the improvement in margins despite the dip in revenue? Is this the level of margins that you think is sustainable, or do you think you can actually improve on it?
So the way we are looking at our margin development is a function of multiple dimensions. Our product mix is changing, our geography mix is changing, and it's changing favorably in terms of our ability to report better margins. The commodity prices have started to moderate, so that's another helpful factor. We believe that as the trend continues, we will be in a position to continue to have a better bottom line result reported. However, whether it will become higher than this or will become lower than this is a matter of time. So I would not be able to give a specific number around that. What's very important to see is that our business mix is changing in favor of improved margin businesses.
Okay. What about the order inflow? Your order inflow is a decline for the fourth consecutive quarter. Is this a conscious call, or are we seeing a slowdown in ordering activity? And do you have a target for FY25?
So yes, we have seen that till about 4 quarters ago, our biggest segment used to be the domestic ethanol business. And there, because of the two, what I would call as temporary measures that were introduced on the feedstock side by the government, one on the rice stoppage of rice issue from FCI go downs, and the second one on the sugary feedstocks when syrup and molasses B were temporarily taken out from the permitted feedstock list. These two led to a slowdown in our largest segment. We were working on other segments in any case on a parallel basis, and that is what has helped us to actually keep the trajectory of our order booking where it is. And we believe that the work that we have done and the inquiry pipeline that is built up for us, especially in the energy transition space, is actually going to start changing the direction very, very soon.
Okay, you're targeting apparently 50% revenue mix from exports by 2030. Right now, you're at 19%. Just talk us through the demand environment. I mean, are you confident that you'll be achieving these targets, and which are the geographies that are doing well for you?
Yes, we have given a guidance that we would like to shift from a 19% base to a 50-50 ratio as we move through 2030. And the quarter that has gone by, we have seen our order book at the 42% of the order coming from the export business. And that's been the trend over the last 4 or 5 quarters that we have seen the export percentage of the overall pie increasing from 19 down to 42%. What we are seeing is clearly the energy transition space and the low carbon ethanol. These are two spaces where we are seeing increased activity, and that is supported by the fact that as we move forward, we'll also see sustainable aviation fuel start to play a major role out there. So these three factors combined are actually leading to a situation for us that our export markets are beginning to grow at a very, very fast pace. Although in the export markets, the business cycles and the models are different compared to India. So timelines are a little extended. However, when they happen on a very certain kind of a time framework. So we are very, very confident that as we move forward, we will see this dynamics change that is taking place play out favorably for the company.
Okay, let's move on. You had engaged with 8 clients for energy transmission and climate action. When do you expect these engagements to bear fruit?
So if you would actually see, we have seen these already started to. So energy transition and climate action is the segment that we have spoken about. And we had mentioned about a very significant contract that we got from a blue hydrogen utility in the last quarter. And in the quarter just gone by as well, we have received a contract for managing carbon sequestration system for a blue hydrogen project again in Europe. So Europe and America are likely to play out a very major role for the ETCA segment of ours. And we clearly see a lot of activity build up there taking place, especially on the blue hydrogen, green hydrogen, and waste to energy projects.
You've commissioned the Mangalore facility. As inquiries get converted into orders, how quickly do you expect this to ramp up, and what's the revenue potential?
So the Mangalore facility is now ready to start producing. We have already taken out the first prototype production out of that facility so that we have tested our systems and processes and people and flow, etc. So now we are going fully ready for the commercial production. And as we move through the year, we'll start to see the shop starting to produce. Of course, it will not be able to deliver at its full capacity in the year. But when fully commissioned and fully loaded, it will actually be able to add close to 2,500 crores to our top line.
Got that. And a quick word on the margin profile of these orders.
The ETCA segment is essentially centered outside India, and most of the contracts, this is also inside a special economic zone that we have this plant located. Therefore, we expect that most of the orders will be for supplying outside India, and the margin profile for export orders is significantly different than and better than the domestic business.
You were awaiting approval from the government on the JV with IOCL. What is the update there?
Yes. So the good news is that the formal approval from the government authorities is now available to us. It actually happened last week as we speak. So we are now going through the process of the board approvals from both the parent entities. And as soon as that is there, we'll make a formal announcement.
Okay, thank you very much, sir, for joining in. Need to get into a very short break. We'll come back and discuss commodities. Manisha Gupta joins in on the other side.